Good morning, everybody. So this is the recap of today's Bund session on July the 15th of 2019. It's Monday. Let's have a look first on my today's hypos and big picture pre-market preparation. And let's start with the hypo number one. This was my first hypo today. Within the 171.55 to 171.77 I go for the range. That means range trading from outside inside. We're still in a short market, so first you may look for the short range if there's responsive selling at the 77, if you can spot it and have some play for it. For me, this was the open, for you as well. And now price is going up to this region. This is the 77 where I said I'm looking for the range short if there's some responsive selling. Once they got up to this range, you see already that people got rejected and that there was also some lack of interested in buying at the 76. And so you can now look for a cheap entry, which for me would be the area around 74, 75 around, and can open up your position. And depends on what trigger, of course, you use. You can also wait for some spike at first. Some people got stopped out and then got rejected. You never know. For me, it's enough if I see that the first rejection after the first attempt, there's a second attempt, and this is here, and they also got rejected. So for me, I would look then for a for a stop sell order here around 74 to get into cheap with around the top area, and then having a stop 2 ticks above, about the 78, 9. I'm above this high volume edge, which I marked as the range for range short. So they still looking, they still trying to get into the buying, but there still was the rejection. Now you see that what I was talking about, this is the spike. Okay, they tried to push higher. There was not really big like stop out, and you see, bam, there's the rejection. And again, so if you are already in this trade, anyway, this was the moment. You see now there's the range short. Reach the first target. This would be intraday, the level, the low. But I said for the reward should be at least a 2-to-1 risk reward, which meant I was looking at this trade at least going to the yesterday VPOC. So my target would be the area 66, 65. You never know if you get paid. In this case, you get paid. All right. Then, market was strong enough to already play the long again at the VPOC from yesterday. And it's going up again. But you see still responsive selling and price is going back again. At the moment, let's have a look. What is the intraday profile looks like? All right. At this moment, you can see that there's the intraday POC is around the 70. And why do I show you this? Because there is, of course, another hypo for today. I said below 55. Okay, price is too far away. So you're looking for hypo number 3 then, or hypo 1, of course. Could be still range trading, but you also look for hypo number 3. And this is, I said today, long only with value above 74 area. So this is the edge from 74 to 77. And a clear holding in this region above. And also absorption must be seen. That means that people trying to get out of the long, maybe fixing the downside, you want to see absorption, passive buying. And this would be like a wedge consolidation, also absorption, and also some holding above. Means we have time and we have the volume and we have value. So we look for the long. And what happens? We still hypo number 1 is then if we thinking in range trading, I want to see this behavior. I want to see that pricing crossing the intraday range, which the first time is a range is built after this 65. So this is the first time you even can talk about that there's some kind of normal distribution and say, okay, this is right now at the moment intraday the range. And the short range, which is preferred in the big picture because we're still in a short trend, in Bund, would mean that you look here for the range short. If you have some play for it, you can go in. This is the rejection. Now you can try to get in cheap. Maybe in this case you wouldn't have come into the trade because it was too fast and didn't go up again. But no matter what, the thing is, at this moment right now, this is the POC at the 70. And there are some things, some signs of strength when you're not, which are the reason that you're not looking anymore for a range short. I'm doing so, at least. And this is when price doesn't matter in this example, doesn't matter if you're in this short or not. If you're in the short, you see dynamic impulse phase 1 started and it's coming back. Now you may got out of it with 0 on scratch or -2 or what. But now think of it, you're flat. Anyway, you're flat. And price the range short can't make it to the other side, but stopped already on the POC of intraday. This means some strength. That means now the possibility for a entry for the hypo number 3, the long with the value above, is not proven by this pullback. But for me, at least, I would not look for the range short anymore because prices could make it to the other side. This is important. If now value is built and I want to see absorption and a holding structure, a wedge consolidation above the 74, 77 area, then you have to go and execute with your play. This would be the trend play in my case. Now see what happened. They couldn't get deeper, lower than the POC, see the pullback, and now prices push higher, and this time you see the first push, and here the second push, even with more buying volume. This is the delta. This is a strong sign right now. So if you're conservative in trading or looking for conservative entries and want to see more confirmation, then you don't have to go into it right now. Because right now, even so, they pushed it once above and the second time with even more strength and more power. If they can't make it higher and if there's no more interest in buying, then they spit all the longs out and we're back into the range. Then it was a failed trade. But I said, because we're in a short market, because of this, I want to see today even some clear holding and absorption for me to look for the long. Okay? Because no need to hurry. We had some strong short days. Now we're in a good, more bullish possible terrain where you can look for a long, but I want to see some more holding above and maybe on the downside when they try to go below, even some absorption. All right? It's just a conservative approach. You don't have to do so, but for me, it made just sense when there is a lot of days that were short. I want to see really some power. Now see what happens. You don't know what happens. It can be the one way or the other. It can go back in the range, but right now the bias is on your side for your hypo number 3, the long. Okay, prices went up. Wow, really strong. Look at the delta. Look at the delta. Now you may say, okay, trade is over. I can't go in anymore, but I say maybe, maybe not. Let's see. They come back. And now you see what I mean. Is this a holding structure? Yes. This is a clear picture, isn't it? It's a range right now in between the 81 and 85. And you see that there is value built. And you see it's okay as long as they stay above the 76, 77 area for me. But if there's much power in it, they don't even test this area down here. But they may test around here in this low volume node. And you see there is also in the book passive also blocking on the bid So that means that they trying to get filled passively with their longs. All right, now we have the first sign. We want to see, remember, a clear holding. And what would be nice as well would be absorption as well. And look at this. Some people may close, some people may trying level 2. I say this is level 2 traders trying to fix it, try to push out people off their longs. And you see that in the delta, even though they push lower, they got absorbed. And see again, holding structure, boom, push again to the low. This time, no active buying, but you see the absorption in this level at the 80. All right, at the 80. If you don't see it clear, let's have a look here. I make this bigger. Look here. This is the level 80. Here was an active buyer again at 172. Here, no active buyer, or not so big, but you see 278 people sold into the bid at 81, but they just got one tick deep lower, and there was only 2 ticks selling. And now see this. Now 554 people sold into. But they absorbed it. All right? So, no more selling below, and we're still in this LVN zone. And you see now, after they got back and more confidence buyers stepping in, buying market, they also fill out the bid again. So they still interested, even with some selling, interested, staying, of course, in this long, actively taking some longs, and also passively in the order book, providing liquidity, and people trying, if they push deeper again, trying to get filled with longs. In one word, this is absorption, followed by active buying. One back. Now switching again to the trading screen. And what you see here now is, after this absorption and stepping back into a little bit more active buying, the second attempt. Got into this LVN absorption. And now see what happens. Now more confidence. And still not able, there was confidence, but able not go below the above the 85. But doesn't matter. They're coming back, they're selling into it, and there's absorption. 193 contracts into 81, going to the 80, but the structure overall, which is right now between the 79 and 85, right now holds. All right? See delta. You see that overall from this moment on, there are 2 times here and here trying to push them out of the longs, but they absorb it because they're thankful. If you're a big guy, you want to place a lot of buy-in orders. If you put them into the market with a market order, you may drive the market to the upside, and you having a bad price because you're pushing yourself higher, which makes a bad mixed price you enter. But if you hear this situation and know that people will push it again, try it lower, you can hold your hands up and go into the market passively, because you just put the liquidity here, you put the limit buys, and you see people pushing deeper, you got filled. Of course, it's a little bit risky as well, because if they push you lower and if they sellers are stronger than you, then you have a problem. And once they push it lower, I would say below the 76, 77 level, then we see some really sold buyers got pushed out. But right now, they know how big they are, they know their risk, they know how many positions they can handle and are allowed, so they stay and have control. Now what happens? Of course, now, also the guy who tried to push it, out of the positions, or people who, for what reason ever, that's not only short-term traders who sell there. There might be somebody who have to hedge some fund or whatever. But anyway, this need to stop now. And if they stop, you see this here in Delta, if they stop making lower lows and lower highs in Delta, and people going back like here, trying now to actively buy again, then we will see the push on the upside. And you see that starting first in Delta. Again, like here, people now trying to buy again. Nothing happened right now. It's a little bit mixed. Yeah, we stay in the structure. You see the absorption was here, and was here. But right now, what you have to do is now, you have, if it's not even, there was the time already here and here, you have to think, where's my cheap entry price? I would say cheap entry price would be around here, this 81 area, with a stop around 65, 60, 75, 76. So in this trade, now what happens? See that? Delta now is getting more confident. People who buy in is now more confident. You see that? Absorption of bigger push to the low, and it's now always getting smaller. The attempt of the shorts are smaller, and at the same time, the people who buying getting now more confident. Look at the delta. I would say this is a difference between to this or to this. Now is more stronger. Now there really is the second attempt to go for the long. Still somebody selling, in this case, active into it. And again we're at the level we have to measure at the 70, 79, 80 area. But still the people who pushing out, they got absorbed. 305 people now pushing into the 171.80. 305 contracts, but they absorb it. Still, what I said, the buyer is here and he's buying passive. Okay. And now see this. Next attempt. This is a really big one. 286 contracts got traded. 80, 14. This is more than 300 got traded on its way up. And now nobody selling at the top. Only 2 contracts. Again, 225 people. Only 56. And now again, somebody 155 selling, but can't be going lower than 183. So now if you wonder, why can't he go lower than the 83? I can show you. And let's go back to the footprint. I mean, that's just what I want to see. That's just what we want to see. Is you see that they pull the limit higher and higher. The bit which is filled, and of course, because this is a real liquidity, it is like blocking. It is like a support. And you see that when the people trying to sell into it, they got absorbed. So I mean, here, the 150 got a little bit absorbed. There was only 16 contracts, okay. But you see they push it higher and higher and higher. And the people now trying more aggressively going into the long and also buying market very aggressive. 143, 277, okay. This is important. And let's see what's happened again. You're in this trade maybe, you got into this cheap, you see in at the low area, you're just watching, you will see the absorption. You don't want to see that they push below the 79, and at the last level was of support the 76, 77, but we don't even come so far. So what we see is still, remember my hyper 1, we want to see a holding structure, which we see. We want to see it above the level, which we see. And we see absorption, which we see. We have everything we need for, in my case, for the trigger. So you're in the trade, and now you see, again, they pushing deeper. I'll show you again, because this is so important to see. You see this here at the 83, now pushing into it, 60 contracts, but you see, the liquidity is still here. You see that? They push it. They push it. Passively. They get filled. And of course, you don't know what happens next. The liquidity can disappear, and the sellers can be so huge that everything falling down. But this doesn't matter. That's the market. It pays you or it doesn't pay you. But I just want to be that you're more open and clear to see what happened and see the order book and see how it can help you to At this moment, not here right now, because you're in the trade, you wouldn't not, I would not close the trade if they get deeper and tick deeper, because my holding structure is here at the 79. But just see what happens if people are interested in buying. That you only have to see what it looks like also in the order book, in the footprint here, and see how the liquidity is pulled, and see how they try to get in actively, and see how they react on the selling, and see that there's absorption. Just these things I want to see. All right. So, what happens? Now, more and more, at this moment, see that the value is going higher and higher, okay? At this moment, we just built value around here and had some, had some value POC short term at 82, and now see how they build higher and higher and higher and higher, and see how also the value is following in this case the price, okay? Not price is following value, but value is following price. This is strong for a trend. You see now 82 is growing and growing and growing, and see in the total profile of the day so far, intraday, you see that this is already became the POC of the day, 82. Value follows the price. This is trend, all right? It's good. You've seen it, you see you see the absorption, you see the holding structure, you were looking now for the entry, maybe you got in here or here, around the zone, and now you're in the trade. Okay. See what happens. They staying above the POC, they're proving again, they got absorbed, now see again, selling is decreasing, if we see now buying increases, and again, coming back, but they still interested. And you see the value and the volume rises now above the 83. And you see people pushing out, getting again, but got absorbed, again, active buying. Somebody here trying to push with a lot of people. Maybe this is the first people who taking their profits. You don't know. Maybe some guy who's just had in its or her preparation a level where you're looking for some shorts. Doesn't matter. Important is that those shorts got absorbed, or at least the last levels are not taken out, which you take as a reason to sell. All right, you see that? Well, this is running and running and running. Now you see that they build value around here, and see that time, and see the price, and see how the value follows the price. Now the POC is jumping from 82 to 97. If you're still in the trade, for me, this would be the level. I don't want to see prices pushing lower, and I don't want to see end of absorption. I want to see it's okay if they spike to 99 and 92, 91, 90, but then it have to come back. But this would be now for me the level where to liquidate the position. And what we see is it's coming up. It's 11:30 right now. And they still stay below the level. So right now at the moment, the position is still active. Okay, I didn't look at the big picture where we are right now, if this is still a profitable trade. But anyway, this trade made about this trade went from the entry level about 81 up to 105, so about 22 points, 22 ticks in Bund. And with more contracts, you may close one here, or you close after they come back around here. And now if you have a second contract, you may close if they going below this LVN, so below the 90s level. Anyway, this is today's recap, a little bit more advanced, a little bit more detailed as usual, at normal, but just to show you how I'm thinking and what I'm doing to get better every day. Because still remember, you can, this is all now reasonable, what I'm telling you. This is all now technically, and this is all now what I learned and my way to play it with my plays and with my entries. You don't have to do it like this, but I show you how I think at this moment. And you always have to be really good in this, because the second thing then is to trade it. And it's a different thing. It's one thing to tell you the way I did right now, and because I prove myself that this is working. But the other thing is to trade it well. And also I'm not able to trade this all the time the way I just told you, because sometimes emotions are still here. Emotions are still not perfectly under control. That's okay. At least the most time I'm able to control it and to be profitable. And this is very important. But I can tell you, this is not easy to accept that there are emotions and they are the reason. Once you have a working strategy, that they are still there and they are a reason from this old behavioral patterns for ending trades maybe too early. And so what I'm doing again to get better every day is I'm having my playbook, having my psychological journal. I do write down my emotions while I'm trading in the execution phase and the handling, and also with from time to time during the period, also in the time when I'm flat. And I'm the result of all this is that I'm more neutral and in rapport to these emotions, which makes my mind clear. And that's the thing, that's the real advantage at the end which you need. If you can handle this and stay clear mind, then you're ready to be consistent, profitable. All right, have a nice day and see you tomorrow. This is Anton Höpfe for Manapa Trading.